GCC bonds have outperformed EM peers during the sell-off last year. And here to look at why is our emerging markets reporter, Netty Ismail. Netty, will they continue to offer investors a refuge from another Trump tweet and the risk that these U.S.-China negotiations could go in the wrong direction?
Hi. Their inclusion in JPMorgan's emerging market bond indexes are set to attract billions of dollars in inflows. Even before the bonds were included in the indexes at the end of January, we already saw about, or Emirates NBD Asset Management actually estimated that about half of the estimated $30 billion of inflows from the inclusion had already come in. And we're expected to see passive money for the rest of the year. And there's also a strong regional bid in the Gulf that will provide a floor to any sell-off.
Now, look, there's lots of people have identified the Khashoggi risk as being something effective for the Kingdom of Saudi Arabia. You've also got oil prices, and we've got this new momentum, I think, in the oil markets. If we look at the push and the pull, what are the dominant forces for the markets as we look forward?
Right. I mean, investing in the Middle East has never been for the faint-hearted. There were always these geopolitical black swans, and then there's oil as well. Oil has averaged at about $60 per barrel this year. Yeah. And if it falls to $45 to $50, that would be negative for GCC bonds, especially for countries that are sensitive to fluctuations in oil prices, such as Oman. For Oman, oil at current level, that's below what it needs to balance its budget. And of course, there's also the risk of higher US interest rates that could actually send investors fleeing from riskier assets again.
I mean, so where are the buying opportunities then specifically?
Global institutional investors tend to go for, especially the US pension funds and insurance companies, they would tend to go for the high-quality names. In the Middle East, they would be like the high grades, such as Abu Dhabi and Qatar. They have sizable external assets that could provide a buffer against the threat of lower oil prices. And also Saudi Arabia. If you look at the yields compared with Indonesia, they're actually quite similar. For the 2047 bonds, it's at about 4.8%, even though Saudi Arabia is rated 4 levels higher by Moody's.
Netty, thank you so much. Netty Ismail, our emerging market reporter, resident here in Dubai.